And as we've said, Jeff, this is what it sounds like when doves cry. Because the most dovish member of the Fed, I think, Lael Brainard, has now turned into a hawk. I mean, that pretty much completes it. How hawkish and aggressive with rates do you think the Fed is going to be?
I think this is Fed capitulation at its best, Sully. And to see Brainard really come out, with all due respect to her and her position as first lieutenant of Fed Chairman Powell, where was she when he was talking about inflation being transitory back in 2021? Where was she when we were buying tens of billions of dollars just in Q1 of this year? So I think it's a little bit too late. I think it's actually a little bit reckless to talk about this after a 100 basis point move in the 10-year note. We started the 10-year note off this year at 1.53. Now we're at 2.6. So maybe this is the top tick for inflation because of the doves crying or panicking. But I think this is absolute capitulation. And I think we'll have to see how she talks about running off that balance sheet. We knew that was coming. Sully, their balance sheet is borderline gross. The amount of liquidity in the market is gross. So if they pull back at $100 billion a month, they're still going to be at $8 trillion when we ring that New Year bell for 2023. So a lot of rhetoric, a lot of jawboning. Markets did not like it, no doubt about it. And I stay up at night when I talk about the 10-year note being above 2.5%. So I think it's short-lived, but this is absolutely bothersome to every home buyer, to everybody who has anything tied to some form of a loan.
Yep. The Fed balance sheet is not quite, but you know, what is it? It's not quite double the annual budget of the federal government of the United States, and it's overseen by a handful of unelected and largely semi-anonymous officials. A little bit terrifying, actually, if you think about it. Jeff, you probably just heard our segment with Diana Olick on rates. I mean, a lot of people may not own stocks, but they probably own a house, right? I mean, are you worried about the macro economy from a home and an inflation perspective?
Well, I think it's different this time, Sully. You've never seen U.S. household in such a better position. Owning stocks or not, we have seen debt to income at the lowest it's been in quite some time. So I really do believe that we're in a pretty good position from household balance sheets. So yes, it is alarming, but I think it's okay if we have a little bit of a cool off. But I don't think the 10-year note, the long end of the curve, I don't think the Fed can allow this long end of the curve to stay this elevated or go any higher. I know there's a lot of newly anointed bond experts rolling out every day or every hour, but I think the fact that the Fed is going to be in a bit of a position here, but the only thing they have going on their side, and this is kind of a lonely view, Sully, is that I think inflation actually begins to abate. We really are seeing the global economy. I know Asia is still in some lockdowns, but domestically, we really are seeing the reopening. I'm seeing people travel, seeing people spend on services. Very different, and in contrast, the amount of being spent on goods.
For now, and to your point, everybody was a financial crisis expert in 2009. I lived through that one as well, Jeff. What's going to happen with the equity markets? You heard our RBI the other day. Stocks can and do go up when the yield curve inverts. It doesn't kill the market. The economy and the stock market are different things.
It doesn't, and historically speaking, we see some form of recession 20 months subsequent to that inversion, but it's different this time. We've never seen this balance sheet. We talked about the massive amount of assets they have on that balance sheet. So I think what we've seen in the S&P 500, and we actually see what's going on with the VIX, we've seen nerves calm down because we are range bound. We saw a sensational snapback rally at the end of the month of March. We saw some resistance at 46.50, but I think what's important, Sully, is having diversification in your portfolio. Here at Sanctuary Wealth, we talk about diversification. Look at an ETF, USMV. That's the minimum vol ETF, which owns about 150 stocks. These are kind of boring stocks that we don't talk enough about, but think about Kroger, Procter & Gamble, Pepsi, Johnson & Johnson, even Berkshire Hathaway, which is having a heck of a year. Owning some of these names in a diversified manner is going to help mitigate risk to the downside, but I envision earnings season to kind of give us a lift, but this can be a bumpy road today and for the rest of the week as we digest some of these really hawkish words.